anything I would do is just going to attract more attention to me. And because it's always been about the company first, I made a very conscious decision not to speak.
Adam Neumann. He promised to elevate the world's consciousness, redefined what office space could be.
Instead of saying business units in work, we have mission. So our first mission was create a world where people make a life. That's for WeWork. We live is helping you live and not just exist.
Raised billions in venture capital and built one of the most hyped startups of the decade. Then he burned it to the ground and walked away with $1.7 billion in his pocket. Was he a visionary genius or just a really slick scam artist? This is the story of WeWork, how it went from a $47 billion rocket ship to a financial punchline, and how Adam Neumann managed to sell a dream, then leave with the money when it crumbled. Let's break it down. It started in 2010. Adam Neumann, an Israeli entrepreneur with a background in baby clothes and a lot of charisma, teamed up with architect Miguel McKelvey to launch a business called Green Desk. It was an eco-conscious co-working space in Brooklyn. The idea was simple: take underused office buildings, furnish them attractively, and rent them out to startups and freelancers who couldn't afford traditional leases. Green Desk was successful, but Neumann wanted more, so they sold it off and launched something bigger, WeWork. From the beginning, WeWork was marketed as more than just office space. Neumann didn't want to lease desks. He wanted to change the way people work. He described WeWork as a physical social network, a place where people didn't just rent space, they belonged to a community. That narrative hit at exactly the right moment. The millennial workforce was rejecting the cubicle. Tech startups were booming. People wanted open plans, kombucha on tap, bean bags, and neon signs that said, "Hustle harder," and investors were listening. Between 2010 and 2019, WeWork raised nearly $13 billion. Most of it from a single source. Masayoshi Son, the CEO of SoftBank, and his $100 billion vision fund. Son believed in moonshots. He wasn't looking for modest returns. He wanted to back world-changing companies. When he met Neumann, he reportedly told him, "You're not crazy enough." That was all Neumann needed to hear. The funding exploded. WeWork began signing leases across the world. New York, London, Shanghai, Sao Paulo. They weren't buying buildings. They were locking themselves into long-term leases, betting that the demand would always be there to fill the space. And at first, it was. The company launched new projects: We Live, co-living spaces; Rise by We, a wellness club; We Grow, a private elementary school. It was no longer about office space. It was a lifestyle. Neumann preached a gospel of community and spiritual fulfillment through work. At WeWork's summer camp events, thousands of employees gathered in the countryside to party with bands and alcohol, while Neumann gave TED Talk-style speeches about elevating consciousness. He said WeWork was going to be bigger than Apple, bigger than Google. He wasn't joking. At his peak in early 2019, WeWork was valued at $47 billion. That number wasn't based on revenue. It wasn't based on profit, because WeWork had none. In fact, it was burning money at an unprecedented rate. In 2018 alone, it lost $1.9 billion. But valuation is about belief, and belief in Silicon Valley often outweighs reality. By 2019, WeWork had over 500 locations in more than 100 cities. It claimed to have over 600,000 members, and it was ready to go public. That's when everything fell apart. In August 2019, WeWork filed its S-1, the document required to go public. It was supposed to be the final step in turning WeWork into a public powerhouse. Instead, it was a disaster. The S-1 revealed staggering financial losses. It also exposed serious corporate governance issues. Neumann had trademarked the word "we" and sold it back to his own company for $6 million. He leased buildings to WeWork that he personally owned, collecting rent as both landlord and CEO. He had borrowed hundreds of millions from WeWork at below-market interest rates. And worst of all, he had already cashed out nearly $700 million in stock and debt before the IPO even happened. It was a red flag bonanza. Investors panicked. Analysts trashed the company. The media dug into Neumann's private life, his private jet, his interest in becoming president of the world, his alleged use of tequila-fueled decision-making. Within weeks, the IPO was shelved. In late September 2019, Neumann was forced to resign, but he didn't leave empty-handed. To walk away, Neumann received a staggering package: $970 million to buy back his shares, $500 million in debt refinancing, and a $185 million consulting fee. In total, nearly $1.7 billion. Meanwhile, thousands of employees lost their jobs. Many had worked at WeWork for years, believing in the mission, holding worthless stock options. Some were laid off with minimal severance. Others saw their savings vanish. It was one of the most lopsided exits in tech history. So what was the real problem? WeWork had a fundamentally flawed business model. They signed long-term leases, took on massive fixed costs, then tried to fill those spaces with short-term tenants. It worked in good times, but it had no buffer for downturns. It wasn't a tech company. It didn't scale like software. It was a real estate company that dressed up like a startup and was valued like a unicorn. But even that might have been manageable. If it weren't for the reckless expansion, Neumann wanted to grow at all costs. He said the goal wasn't profit, it was domination. He spent hundreds of millions on marketing, subsidies, free perks, and new verticals that had nothing to do with the core business. All of this was possible because SoftBank kept funding it. In many ways, this wasn't just a failure of WeWork. It was a failure of unchecked venture capital, of a system that rewards charisma over discipline. Inside WeWork, the culture was chaotic. Executives came and went. Neumann's wife, Rebecca, held a senior role. She reportedly fired employees on a whim, including one person she thought had bad energy. Parties were constant. Spending was excessive. Employees were encouraged to see WeWork not as a job, but as a calling, all while the company hemorrhaged money. When WeWork pulled the IPO, it wasn't just a financial failure. It was a spiritual crash for thousands of workers who genuinely believed they were building something revolutionary. After Neumann's exit, SoftBank took control. They appointed a new CEO, Sandeep Mathrani, a veteran from the retail real estate world. His job was simple: clean up the mess. He cut costs, shut down WeGrow, sold off acquisitions, laid off more staff, tried to renegotiate leases. WeWork stopped expanding and started contracting. Then the pandemic hit. Remote work exploded. Office demand collapsed. WeWork was already bleeding. Now it was in freefall. By 2021, the company managed to go public through a SPAC, essentially a backdoor IPO. But it was a shadow of its former self. Its valuation, a fraction of the $47 billion peak. In 2023, WeWork filed for Chapter 11 bankruptcy. It was the final blow. The company that had once claimed it would change the world was now struggling just to pay rent. And Neumann, he was back. In 2022, he launched a new company called Flow, another real estate startup, this time focused on co-living. It raised $350 million from Andreessen Horowitz, their biggest individual check to date. By 2024, he expressed interest in buying back WeWork's assets. Let that sink in. The man who helped drive WeWork off a cliff might end up buying back the wreckage. So what does this teach us? At the core, it's simple. Storytelling can raise billions, but it can't balance the books. Adam Neumann was a master at selling a vision, community, purpose, revolution. But in the end, WeWork was just real estate with kombucha and slogans. It had no tech, no scale, no margin, just a dream wrapped in debt. Neumann didn't fake the product. The spaces were real, the losses were real, and his exit, even more real. $1.7 billion real. So was he a scam artist? No, but he played the startup game better than most and walked off with the jackpot. And that's the takeaway. In today's system, hype wins until it doesn't. If this story hit home, hit like, subscribe, and tell us in the comments, was Neumann a genius, a grifter, or just a guy who saw the loophole and took it? We'll catch you in the next one.